That's what she means. Right, we're going to record this. And so if anybody doesn't want to be on camera because they haven't told their spouse where they are tonight, now's the time to say. Thank you all. I joined the Global Entrepreneur Program in 2004 when I was 12 years old. And it has aged me. It has aged me. But there is some good news. Events like this make me feel younger. And I'll tell you why. It was something Beverly said. Beverly, you said, passion, show the passion. Now, we're going to show passion in this because, look, it is Monday. It is, what's my eyesight, 10:45 p.m. And the NASDAQ says it's up 150 points. So there's money being made somewhere in tech. And we are all passionate about our businesses. We're not here for our health. We're here because we enjoy what we do, and we're going to communicate that. I know my panel is definitely going to communicate that. I should also say, I absolutely bloody hate fundraising. I set up, so you're probably thinking, why is he hosting this bit? I set up the hedge fund in 2004. I'm going to show you something. That's when I started fundraising. See that? That's a broken toe. I'm not going to lift it any higher because otherwise I'll break the other bloody toe. That happened last week. I enjoyed that more than I did fundraising in 2004 for the fund. Right, just so you know. That's how much I hate it. And I'm going to tell you why I hate it and how I... But there's a good thing about hating something. You don't want it to last long. You know that. You know what I'm talking about. You do not want it to last long when you hate it. So... you want to be effective, you want to be efficient, you want to get on with it and get the money in, and then get on with the business. So that's what we're going to talk about, how to do that properly. Now, there was supposed to be a third person on here, but we discovered he was a man, so we got rid of him. We have two lovely women on the stage. Now, the first one who I'm going to introduce is Nadia. She's the best type of GP alumnus. What's the female of alumnus? Alumna. I had a proper education, I did. Okay? You speaking Latin. She's the ideal type of alumna because she hardly ever bothers me, rarely asks for anything. I'm her deal maker. She probably didn't even know that. Makes her even better. Makes her even better. And all I see on LinkedIn is success after success after success, and here's the clincher. She tags me on those as well. Yeah. So I, like any useful man, take credit for the hard work of a very successful woman. Exactly the kind of alumna that I want, or even any kind of alumni that we're going to get. Now, Rachel is fortunate in many other ways, one of which is I'm not her deal maker. She landed from Australia 12 hours ago. Not for the first time, I should say, but 12 hours ago. So it is breakfast time, right about now. But what a trooper. She is here right now for us. Now, I'm going to start with you first, Nadia, as Rachel catches 40 wings. Nadia, tell me a bit about Credit Enable, why it's amazing, and then we're going to start with how everybody raises lots and lots of money.
Sure, so can you all hear me? Yeah. Okay, great. So Credit Enable is a financial technology platform, and we basically intermediate in the debt market for small to medium-sized enterprises. But you can think of us as sort of like the Uber for SME borrowing. So SME needs debt, calls platform, says I need X type of loan of X amount, and platform goes and finds loan. This is really important because in this particular market, it's literally the most inefficient market within financial services globally. You can imagine that small to medium-sized enterprises looking for debt basically spend on average 4 to 6 weeks trying to engage with lenders of different sizes and types to eventually have a success rate of under 10% of getting that loan. And lenders are spending a ton of money on people that they're never going to generate any revenue for. So intermediation is super important, and that's what we do. We also offer digital financial wellness programs for SMEs to help them understand how to improve themselves and eventually enter the market for credit. So if you imagine what Credit Karma or ClearScore in the UK has done for consumer borrowers, we're doing that for SMEs. And we have our headquarters in the UK and we operate in India. So thank you very much for having me, and I will be very honest about how to raise money and who not to raise money from.
Fantastic. Well, that's really good because that's got them on a hook.
Yeah.
Now they won't leave. Before I go to you, Rachel, one last question on that intro point. Give me in one sentence why you're so passionate about your business, because I see it on LinkedIn all the time. You are really passionate about it.
I'm very passionate.
Share it here.
So I'll tell you at the macro level why I'm passionate is because SMEs generate all jobs and all growth in economies. Big companies shed jobs, small companies grow jobs. But really why I care about this is because I grew up the daughter of an entrepreneur who left a pretty big cushy job at Alcan as the head of R&D, the biggest aluminum company in the world, and launched a very capital intensive business in the superconductor sector just before .com, very badly timed. He was trying to raise money from banks. He would go, they'd be like, you're not like a news agent, so we can't give you that loan, but you're also not Airbus, so we don't know where to put you. We'll just make you a corporate client, make you build a huge financial model, do all sorts of stuff. And my dad was an engineer, so he actually could do that stuff, but most SMEs can't. Later, I spent 20 years in private equity, and I invested very large investment portfolios for corporates, for part of the Norwegian Sovereign Wealth Fund. But I was actually owner-operator investor. So I had thousands of SMEs in my supply chain, and they would never get working capital loans from banks. And they would come and be like, I need cash, and I'd be building a hydropower project, and I'd be spending $5 million a day on renting a drill, and the guy would be like, I need $10,000 to come to work. I'd be like, here, just have it. Just come. Even if absolute loss was going to be 100%, it was better if he came than not. So it's not efficient, and there's a need for technology. But when you deliver that and you deliver the loan, affordable loan to an SME, you have no idea the transformative effect. They create jobs, they hire minorities, they create wealth, and the whole economy benefits. So this is why I'm very passionate, because I've seen it from both sides of being the daughter of myself now, and also an investor who had to support these SMEs.
Passion and purpose. Rachel, Castle Point. Tell me about the company and your passion and purpose with it.
Well, let me start with the passion and purpose. I'll muster as much passion as I can.
You look slightly tired, Rachel. What's going on?
A little bit tired. So I'm an auditor. Sorry about that. That was my
Lock the doors.
So for a long time I audited specialist auditing for cybersecurity, privacy, records compliance, mostly government in Australia, if you couldn't tell, and most of the Department of Defence in that remit. And when I first audited, and I would find really just terrible, egregious things with how information was handled, I would escalate that and I would say, look, this can lead to loss of life. Like in theatre, this is very dangerous. It needs to be addressed. And when I first started doing that, I got told that's science fiction. Like, that's cute, but we don't believe you. It's really not that bad. And it was that bad. It just really was that bad. But by the time, just a few years later, that I finished my career auditing and became an entrepreneur, the very last audit I did the same thing. I did this audit of a multi-billion-dollar program for weapons systems, the cyber audit of that, and I failed it. Like, I have failed, I think, every single audit I've ever done on anybody ever. But this time, it was taken seriously, and this time that program was cancelled. That $2.7 billion was just flushed. It was done. The whole program was ended. Which was gratifying because now people were actually taking it seriously. The threat environment had changed so drastically in that time that now people saw what I saw, that this is very dangerous. But it was also very depressing because I was responsible for $2.7 billion of waste that could not be recovered. And also I did think for a little while that a big black van was going to come and take me off the street because of the foreign state who got their multi-billion program cancelled because of me. So that's when I felt like, actually, this is the time. People now take it as seriously as I do. They realise how dangerous it can be to manage information improperly. And also, maybe I can do something positive for once. Maybe I'm not just the killer of projects. Maybe I can be someone who creates something better. So that's what I did. So I designed a way to do this, a completely new paradigm for how this could be possibly possible. And I made my now husband build it. And we launched it. And now 5 years on, we've just got our first commitment from, I can't tell you who from, but it's a big deal here in the UK, and from other big deals in the other Five Eyes as well. So it's been worth it.
Fantastic. Now, I can hear passion and purpose in both of what you said. Just tell me before we continue, which was the foreign country whose
I will
project
not
killed?
tell you that.
You can't. Is it sort of, okay, I think I know where it is. But,
I'll tell you later.
Yeah.
You'll probably work it out if you do enough media research.
Oh, I think we can work it out. We're big fans of them as well in Britain. Now, in terms of capital raising, Nadia first. Tell me something the audience don't know from your experience of raising money that they should know.
Right, so you don't necessarily have to do things the way of like the go for angel, then VC, then PE, then IPO, or whatever that trajectory is. So I'll just tell you a little bit about my journey. I've raised money in very unconventional ways from all the wrong kind of people and in all the wrong kind of way, and started my business also backwards. So I raised my first money into the company was my husband and I, who's my co-founder. But we also, at the same time, raised grant money from an unlikely candidate for that, which was the Shell Foundation. And the reason that they financed my business, even though it seems like it has nothing to do with energy, is because I came from the energy sector and I knew how difficult it was for small to medium-sized enterprises to access finance within that sector. And it was aligned with their goals. So I actually raised about $1.75 million in non-dilutive grant money that got my business going and allowed me to do lots of R&D. After that, I have exclusively raised money from ultra-high net worth individuals. Why? And I've chosen very specific types of people to raise money from. People who had built large digital platforms, people who were in credit and risk in financial institutions, people who had done huge digital advertising kind of platforms. So I've got ex-head of Google, people who built BlackRock for Aladdin, all at the individual level. Why? Because they generally leave me alone, number one. Number two, they don't sit on my board. And number three, when I need stuff, they actually call people and open that door. So they've gotten me contracts with lenders, they've gotten me subsidies on advertising, most of the things I needed. And then I think in terms of like what you need to know, and I like to talk about this a lot, particularly for women founders, is, and I was given this advice very early on in my career in private equity. I was trying to convince my board, which was basically two parts of the Norwegian state, to invest in a $1.75 billion project in Kashmir, which at the time was on the no-fly zone for Norway. Basically, the state had said, if you go into Kashmir as a Norwegian citizen, you go against the advice of the state, and if something happens to you, will not repatriate you. It was that bad. And I was trying to make them invest $1.75 billion in this state. So my board member said to me, nobody's going to like this, so you might as well just start with the risk and how you're going to mitigate it, and then move into the opportunity. So I was like, here's risk 1, 2, 3. This is how we're mitigating it. We had very fortunate to have a partner in Tata who was actually going to expatriate our people, even though the state wouldn't. And we got straight. We went through the risks so fast. So we spent most of the board meeting on the huge opportunity, and they allowed me to invest. And so it's really important when you're because investors like to focus on risk, but if you spend 45 minutes of your allocated 45 minutes on that, it's a guarantee they will not invest in you, because that's not exciting. They need to know what the opportunity is. So get to the risk first, get it out of the way really fast, and move into the opportunity. And especially for women, because they're gonna make you want to focus on that for most of the meeting. And with men, they wanna know the opportunity. So flip it around, get to the crux of the matter, and then move into the opportunity. And that really has served me well in my career. In the private equity funds, doing these crazy deals that no one had ever done before, but also in my own business.
Thank you. Just one quick follow-up. How did you find the ultra high net worths? How were you stalking them?
So we had some initial investors who had invested in previous businesses of ours. They came along for this one. Then they opened their network. And generally we've raised money via our existing investors. Sometimes it's somebody I meet, but I also go to events and I've picked up investors that way too. It's like dating, you know, you meet, you like each other, it's an interesting concept. And I've raised like $100,000 after a dinner sometimes from people. I've also raised $20,000 after 15 weeks of due diligence of my business, right? So you also need to figure out quickly who's going to waste your time, who's not going to be supportive, who's afraid to part with their money. And the other fascinating thing I'll share with you is that sometimes the richer the person is, the more scared they are about making a tiny investment that will never impact on them. And you have to be like, listen, 10 grand is not going to move the needle for you at all. So either make a decision tonight or let's part ways. Because if you go on for 16 weeks, it's not really worth anyone's time to do that.
Fantastic, thank you. Rachel, same question to you. What don't they know that they really should know?
I can give you so many little miscellaneous things when you're dealing with investors at any stage, angel all the way through. One thing to know that a lot of people don't know is you can just say no, you really can just hold your ground, and this is about lots of different things. So in the last year that I've been here in the UK, I've met with we're probably up to 80 VCs at this point, and some of them just 1 or 2 meetings, and some of them several meetings all the way through. But what you learn when you do that bigger sample is what is normal and what is not. And I used to get pressured quite a lot to go ahead without an NDA. I don't anymore, because I never felt that was the right thing to do. And I would get pushback from these funds, and they would say, oh, we meet with thousands of companies every year, we can't possibly do NDAs. And I'd feel a bit gaslit, and I'd say, oh, okay, I guess we better not do an NDA. But now I know that's not true. That's not true. And a good fund will absolutely sign an NDA, and it would be a red flag for them if you didn't ask for one. I've had funds ask me, oh, can you just email the stuff? We don't want to use Teams to access your data room. No, I won't do that. And if you can't work out how to use Teams and you want to operate insecurely, you're the outlier, actually. That's not normal, because all the other sophisticated investors I talk to are very happy to do that. So you can just, you'll know instinctively what's a good idea and what isn't, about what you should share and when, and what you should give away and what you should keep. And you'll find usually that your instincts are right if you do a big enough sample size. So, I mean, lots of little things like that, but that's kind of the vibe, right? Know where you want to draw your line and hold that line, because, I've met with 80 in the last year, and there's 800 more to go. There's a lot of people out there who will work with you the way that you want to work.
And how did you find them?
Lots of ways. So again, the way we had our kind of funding journey, we started in Australia, obviously, where there's not a huge pool of high net worth people just at dinner, that you can stroll around and scoop up. So we found some angels early on. And the way that we did that was through government programs. So when I started the company, I knew the best revenue was client revenue, so of course we went after that. And the second best money is free money from grants, and there are lots of grants. And I think a lot of companies, especially in the early stage, don't invest in winning grants because it's a lot of work. It's effectively a massive DD process. But do that DD, because then you will have a data room, essentially. That's everything you need for an investor. It's everything you need to win a tender. It's everything you need to win a big corporate client who needs to see 4 years of your financials and, every other thing you possibly have. It's worth the effort to invest in collating all of that stuff and pulling it together and writing the detailed business plan and putting together the financial model. Because if it helps you get free money, that's good, but it's going to help you get more stuff later.